We have a lot of people in numerous different countries attending this event online. And I also noticed we have some very familiar faces from the in-person events that we often do in New York. You are all very welcome. Here in Miami, we have what is in effect a studio audience to go along with all of you around the world. And what we want to get both from those of us who are here in Miami and also from you out there is a really lively discussion on what is happening in the world of digitalization of assets. So please do use the Q&A button you will find at the bottom of your screen. We want to make this, as I say, as interactive as possible. We will try and take the odd question as we go along, but if we get lots of questions, we'll try and save some time towards the end to answer those we haven't been able to get to. And for those of you who are with us in the room in Miami, just put your hand up if you want to ask a question, and we'll try and come to you as well as soon as we possibly can. So my name is Simon Osborne. I am the CEO of IFI Global, which is a specialist research and media house based in the City of London. We've begun to follow for the last 18 months, 2 years, tokenization very closely indeed. We cover it through 2 of our publications. We have 4 publications, and we also conduct research studies on this subject. And we did one last autumn with investors and managers. I won't go through what that study says, but we'd be delighted to send you the results if anyone would like to see them. But one thing it did find, which I will just mention now, is that this is still very early days in the tokenization development. However, we didn't know this before we did the research. There is a lot going on under the surface. There are a lot of asset management groups, some of them doing very confidential stuff they haven't announced yet, but there is a lot, believe me, going on under the surface in this particular area at the moment. And we may get into some of that in the next hour or so. Before introducing the panel, I would like to thank Jersey Finance very much for sponsoring this event. And I'm going to hand over to Elliot Revson, who's head of funds at Jersey Finance, who's going to say a few words before we start. Elliot.
Good morning and welcome. Thank you for taking the time to join us this morning. My name's Elliot Revson and I head up the funds area at Jersey Finance. Jersey Finance is the promotional body for the financial services businesses on the island of Jersey. In part, my role is to help develop the product offering of Jersey PLC, and in part, it's to tell people about it. As a jurisdiction, Jersey's base case is a proposition of stability, both political stability and fiscal stability, as well as a minimal change outlook from a legal, regulatory, or economic perspective, underpinned by world-class infrastructure. For example, we have the fastest broadband in the world, and by the broad and deep expertise of the 14,000 people who work in our industry. There is no other international financial center that has such a large footprint of experience and expertise. But history tells us the financial jurisdictions that do not evolve to support the underlying markets and the investors and managers that they serve simply die out. The classic example of this is hedge funds in Bermuda. Back in the day, Cayman turned up with a better product and a better service and stole their lunch. A more recent example of this trend is in the securitization market. In the last couple of years, Jersey has been the beneficiary of over 300 structures which were moved to Jersey from Cayman or created in Jersey from a standing start. This trend has been driven exclusively by investors because of the fact that Cayman had not evolved their product offerings sufficiently to support their needs. Let me stress that the relationship between a jurisdiction and the industry it serves must be symbiotic. The jurisdiction must evolve to support the evolution of the managers and their industry. In the context of today's session, which is titled The Digitalization of Assets and the Transformation of the Global Investment Industry, Jersey is a real assets jurisdiction. The future of real assets is in the digitalization of those assets. It is therefore essential to Jersey that we are a part of that transformation, and we've put together an innovation committee comprised of the government of Jersey, our regulator, the Jersey Financial Services Commission, and our industry to ensure we do just that. We are currently finalising a white paper to showcase what we already have in Jersey, and later this quarter or early next, we will be releasing an update to the relevant regulatory framework that will update and simplify the process of establishing and managing digitalized entities in Jersey. But now let me turn to Simon and his panel to look at what this transformation will mean to investors and managers, to look at the developments we have seen to date, and to discuss how this new industry is likely to unfold. Thank you.
Thank you, Elliot. Your quick change over here. And now I'm going to introduce the panel, and I'm going to ask them all just to say a few words by way of introduction on their background and their interest in this particular topic. And I've got this incredibly high-tech device, which is this swivel machine that my laptop is on. So you'll be able to see them at the same time as they talk, which is very exciting. So on my furthest right, we have Dan Kahan, who is the partner. There he is at King & Spalding. Hopefully everyone around the world can see you there, Dan. Based here in Miami. And sitting next to him, we have Erica Gemma, who is the founder of Time Lock Ventures, also based here in Miami. Switching again to my nearest left, we have a very cool looking with this very sexy glasses on, Dan Strackman, who is the managing partner and of A&C Advisors, also based in Miami. And next to him, again, using this very high-tech device, we have Ashraf Rizvi, commonly known as Riz, who is the founder and CEO of Gilded, but based in Connecticut. Thank you for coming all the way down here, Riz. And on my furthest left is Philip Pericki, who's the lead Americas for Jersey Finance. Thank you all very much indeed for joining us. Let's start perhaps in the same way I just went and ask everyone to say just a brief word of introduction. So Dan, should we call you Dan 1 and you can be Dan 2? Okay, Dan 1.
Hi, I'm Dan Kahan. As Simon noted, I'm a partner at King & Spalding, an international law firm of about 1,300 lawyers. I'm a corporate transactional lawyer and co-chair our FinTech, blockchain, and cryptocurrencies group. And my focus is really on advising companies in that space on transactions, but also guiding them through the regulatory challenges that we'll discuss more today on the panel.
Thank you very much. And Erica, can I come to you?
Yeah, absolutely. Hi, everybody. I'm Erica Gemma. Nice to meet you guys. I have a venture fund called Time Lock Ventures. We invest into startups that create infrastructure for the blockchain space. Specifically was introduced to Jersey Finance because we have an infrastructure company that is really interested in tokenization. I opened up a Bitcoin center in downtown Miami in, 2019, meant to educate a lot of people in the city about cryptocurrencies. And from there, kind of came on my path. But my first foray into blockchain was, I used to work in the aviation industry, and we tried to tokenize a fleet of airplanes, but this was in 2017, so it was way too early. But I've definitely had a special place in my heart for tokenization, and I think that the time is getting a lot closer.
Thank you. Dan Strackman, or Dan 2.
First of all, thank you for the kind words about my glasses. It means a lot. But yeah, this is Dan Strackman here. I am the managing partner, as Simon mentioned, of A&C Advisors. We are a strategic consulting and corporate governance firm based here in South Florida. My interest is in tokenization, as I happen to be a blockchain and BTC junkie, but I am a trustee of ARCA U.S. Treasury Fund, which is the first 40 Act product approved by the SEC in the blockchain and cryptocurrency space.
And Riz is a practitioner, but I will ask him to explain more about what that means.
Sure, thanks, Simon. So yeah, Ashraf Rizvi, everybody calls me Riz. Longtime banker, so worked at the three big Swiss banks, UBS and Credit Suisse when they all existed. Now there's only one, of course. Ran the global metals commodities businesses there, emerging markets, FX, and fixed income repo for credit products. So a lot of background from that space. And then after I left there, I ran a global commodity investment management firm for about 10 years. Managed a few $1 billion for a variety of clients, took those experiences and translated into today what is now Gilded, which is really about how to make physical assets accessible to investors by making them both digital, mobile, and functional. So we're very much about digitization, which kind of goes hand in hand with tokenization. And I'll speak, I think, as we get into the session, where I see similarities and dissimilarities in that, and what the opportunities are as well as some of the risks.
Thank you very much. And Philip.
My name is Philip Parecki. I'm the Americas lead for Jersey Finance. My role is to bring Jersey's product offering to the North American markets, primarily to essentially provide an education on why Jersey should be part of cross-border discussions. If you're structuring vehicles or holding companies or funds or looking for access to capital, Jersey is the place to structure. So we want to be in those conversations. Elliot mentioned at the very beginning that in this particular space, if you're looking forward and trying to find a jurisdiction that is bringing together industry, the regulator, and government to provide solutions, we think Jersey's at the forefront of that. And Simon, I'm hopefully I have an opportunity to discuss this in more detail today.
Fantastic. Well, exactly. We definitely will. So the first question we'd like to deal with today is what are the chief benefits of tokenization? Just to mix up the order, perhaps I will start on my left with you, Dan.
Well, I think the best person to talk about that would be
Okay,
Riz.
right. Well, we can
he's
go to him.
tokenization.
You're passing the buck already.
Well, you know, it's the way of the Americans. Yeah.
Yeah, sure. I think the basic premise behind tokenization is to really take assets that may be less liquid, could be more liquid, and they could be tangible or intangible assets. It could be real estate, it could be stocks, it could be bonds, it could be almost anything, stamps, Michael Jordan sneakers, and then make them available such that you could buy them in whole or in part. It could be fractionalized. So that can be very powerful, of course, and there have been estimates by, let's say BCG, McKinsey, others, that tokenization by 2030 will be upwards of a $15 trillion industry, because it can help a lot of these financial markets that I grew up in that have typically been in T+2 or T+3. I can certainly remember days of FX where it's T+4. We can now make those things happen on a T0 basis, which can be very powerful, not only from capital usage for the institutions, but in terms of lowering risk, speed to market, all of these things. So, so in that context, tokenization can be very powerful. There are some challenges that you have to think about, though, of course, because with tokenization, what you're doing is you're sort of creating something akin to, let's say, an ETF or a secure, could be deemed as a security, for example, in that the token is the owner of the asset, not the individual. And so that can be quite, quite different. So example would be sort of like a REIT. A REIT is the owner of the asset, not the purchaser of the REIT. And so that can have certain implications, both from a legal perspective, from a credit risk perspective, all of these things, from a governance, regulatory perspective, that will have to be thought about. So, so I think I'd say I'd wrap it up and let others contribute to this, but I'd wrap it up by saying it can be very powerful because it can do a lot of things that really move the needle in a significant way into the 21st century, but it comes with certain caveats and risks that have to be mitigated as well. And that may also be part of the reason why the take up, which is what you mentioned at the beginning, hasn't been as fast because some of the secondary risks have to be considered as well.
Right, and we'll get into that probably in a few minutes' time. Whilst the camera's pointing in this direction, Philip, do you want to answer that as well? What do you see as the chief benefits of tokenization?
Actually, Riz mentioned it, and I think that's the genesis of this meeting, of this panel, and Elliot touched on it as well. The benefits in terms of transparency, accuracy, those you can't get around, you can't escape the benefits of them. So it means that the industry is going to shift in this direction. Industry shifts in this direction, then you need to be in a jurisdiction that's wrestling with these issues properly, like trying to get their hands around what the sticking points are. Some of those sticking points, of course, are linking the actual asset to the actual owner. These things, it sounds very simple. It gets extremely complicated when you're actually dealing with different jurisdictions, owning different assets. That then trying to harmonize the links becomes very challenging. So in theory, some of these things sound very interesting, but the practical application of them are real challenges. I guess that probably gets to the point on timing that you brought up earlier. But I think the key takeaway is that the benefits are obvious. You have accuracy that you can rely on. You have transparency. Operationally, there's significant improvements. You're reducing a significant amount of human error. Sounds, theoretically, it sounds like that's the direction we need to move into.
Thank you. Dan, do you want to have a go now?
So, well, I mean, I think the question is an interesting one that people are talking about tokenization. They want to do tokenization, but no one really has proven that they can do tokenization. And I think the issue becomes, as Riz mentioned, are these securities? If they are securities, then what do we do with them? How do we get them regulated? The other issue is that people's attitude is, well, I bought it, in the 70s, we went from, I don't remember if it was T+7 in the 70s, right? Then in the 80s, we got to T+3, and now we're T1 when we're trading equity. So it's almost 50 years it took us to get that to this point we are here in the markets. The second issue is, when did ETFs come out, right? ETFs, particularly buying the SPY, came out after Vanguard launched the first S&P 500 global mutual fund, which was the democratization of the equity markets. So I think we're sort of if we look at this from a baseball analogy, we're sort of in the top of the first, and we have a long way to go to get to the ninth. But I think we're seeing some activity, some excitement around it. The real issue right here, though, is what is the regulators going to do, and how are the regulators going to allow for these things to go forward? And while Jersey may be working very diligently to figure out how to leverage their infrastructure to build out more of an infrastructure for these types of products, the question is, what is the SEC going to do?
Yeah, we are going to get into regulation.
Yeah.
But that, again, coming back to my research, or our research, I should say, was surprisingly, when we do bring the R word up in conversation, no, people want less of it. But this is paradoxically one of the few times, if I can ever remember there ever been one before, where people want more regulation because they want some certainty.
Can I just say one thing? The only people calling for more regulations are the same people who complain about hedge fund and private equity fees, those who can't charge them, right? So if you look at the ICI and what they're doing with complaining about hedge fund fees and PE fees, it's because it's backed by Fidelity and Vanguard. The minute Fidelity and Vanguard get on the tokenization wagon, regulation is going to be not as big a deal.
Right. Good point. And same question to you guys here on my right. Erica, can we come to you?
Yeah, sure. Transparency, increased liquidity, I think all those things are definitely a given. But when you look at what tokenization is, it's essentially a more efficient way to go public. It's a more efficient way to raise money. So when you look at the three aspects of people that will be impacted by this, I would say one is obviously the asset issuer, right? It gives them another avenue to make money. And I think that's what people are looking for, that extra liquidity, the ability to tap into different markets. When you look at the investor, when you look at the person that's trying to get into these assets because they want to make money themselves, it lowers the barrier of entry, right? So people that want to get involved in these assets, you have to have a big check size that you could cut. But with tokenization, it lowers that barrier to entry. And I think that this is kind of where you can see problems, because you need to market to those people where they have not been marketed to before. But we can talk about that later. And then I would say the third side is obviously the benefit is in the technology. So instant settlement time, instant auditing, instant accounting, it's all there on chain. And it's just, it adds efficiency, which I would say is also a reason why it hasn't been adopted, but we can talk about that later because it takes away people's, ability to make little pieces of money all along the way.
That's very true. Yeah.
Yeah.
So this is, I mean, there's pushbacks to the benefits. There's efficient, just like with AI, right? A lot of people fear it. And I can see why, because it will take away jobs, but you'll see new things being created. But ultimately, I would say the major benefit of all that impacts all these three areas that I talked about was that it can create these secondary markets that never existed before.
Thank you. We're already getting, I can't believe it because we only just started. We've already got 3 questions coming in.
Oh, my God.
But Dan, to you.
I'll be quick because I'll pick up on something Philip said, which is the accuracy. And if you think about it in the world today, most significant assets are owned on a shared basis, whether that's through a fund or an entity or some kind of institution. And the ultimate beneficial owners, it's shared, it's spread across groups. And if you think about that ownership and you think about traditionally how that's been reflected on paper in Excel spreadsheets and things like that, it's one, you have an accuracy issue, and anybody who's been involved in a transaction involving the sale of a significant asset and then trying to distribute proceeds out understands it's almost insane how you can sell a significant asset or it can generate revenue and you go to distribute proceeds. You know who owns it, you don't actually know how to get funds to people. And so there's sort of one of the really interesting things about digitalization, but tokenization specifically, is you have an accurate ownership ledger, and each ownership record is actually linked to a payment destination. And so it makes transactions much easier to execute and payment flows. And so it's for the first time ever really effectively linking ownership and payment flows. And it sounds like such a technical nuanced thing, but when you think about revenue generating assets, when you think about people who are frequently transacting in assets need to distribute proceeds, which is a lot of asset managers, it's a big deal to be able to do that. And, there are a lot of people that will say, well, you could do digitalization without tokenization. They're not the same thing. But the neat part about tokenization is, again, everybody's got a wallet. It's not just a better Excel spreadsheet. You're actually linking the asset and the asset's ownership to the ability to make payments or transfer assets in kind to a wallet, which is really revolutionary and has not been done before in finance.
Thank you. There's one of the questions, as I said earlier, I think what I'll do is, if the question is pertinent to where we are in the discussion, we'll go ahead and take it, and then we'll perhaps leave the other ones for later. And by the way, if you give your name, thank you for doing that, and then I'm very happy to read your name out. If you don't want your name read out, do what some people have done here and take the anonymous option. So somebody called Ian Hunt has asked, you've talked about the need to link owner to title and title to the asset. Do we need mature digital identities before tokenization can really take off? That's the point you kind of touched upon. So do you want to go straight there?
Sure, it definitely helps. And I think that's going to help with a lot of the regulatory challenges we identify later, because there's a perception that the ownership, despite the fact that it's with a public blockchain, the ledger's all open, there are concerns by a lot of regulators about the opacity of the ownership and who is behind these wallets, and are they being used for illicit finance or terrorist finance or things like that. And if you have it linked to an established digital identity system, that does help address a lot of those concerns.
Okay. And Riz, you touched upon something, the ownership of the assets and the token and stuff like that. Do you want to answer that question, or would you want to make any comment on that before we move on?
Yeah, I think the only thing I'll add to, I agree completely with the KYC AML issue. That's a big that who's the real owner of the asset. And then the other part, which I touched on earlier, which you're alluding to, is that when you tokenize something, essentially somebody becomes the owner of the token and has to manage that. So the example would be, as I mentioned, sort of a REIT, or let's say so the simple explanation would be this: when you buy a house, you become directly the owner of the house. When you buy a REIT, you're owner of real estate, but actually you're not the direct owner of the real estate as you are in the buying the house. You're owner of a fund or a vehicle that owns the asset. And so therefore, there must be some regulatory component there to make sure that that fund actually has the asset that they say they do. And so this is something that, of course, we discovered recently in some of the crypto meltdowns, is that sometimes the assets weren't actually there that the party said was there, right? And so that can create significant opportunities for fraud, et cetera, which is quite different than unique direct ownership. So another way to just very simply think about that is when you deposit money in a bank, that money becomes the bank's money. It's an IOU, and if the bank fails, then you don't get the money, aside from FDIC insurance, which is uniquely different than if you have the money in your possession, which of course is how people did it 100 years ago. That's not very efficient, but nonetheless, you know that you own it and you're not taking counterparty risk. So tokenization does have that risk that it's imputed in there. And that's sort of the negative side that has to be managed. We already discussed all the positive speed and efficiency and all of that, which comes hand in hand.
Thank you. And
I'd actually like to ask
Please.
a question. So, and just taking off of this point, so, and it might be worth just framing it, because sometimes it's lost, that last link in that sort of last link to the asset. Isn't it, we're sort of discussing in many ways, linking to what the official record is. So take the house example, you read versus owning the house, property directly, but who is the owner of that? Who's the official books and records of that ownership? So I take we're in Miami at the moment, so Dade County would be, I presume, the place in Miami where official property records are kept. So you're trying to bridge that link, and this might be a maturity issue that I think Dan mentioned, or the question, the person who asked the question is that it's actually linking to the ultimate asset itself, the official record of it. And that, when you look at cross jurisdictions across different cross-border transactions, that's when you start finding quite a lot of complication, because people don't do things, countries don't do things in the same way. Even in the United States, we record things differently. And that's another part of the challenge, is being able to link to the actual asset. And so Riz, is that what you were getting at when you were talking about the REIT versus, say, owning the house directly?
Yeah, precisely. I think that's the risk, right? So if we go backward in time, a lot of these things sometimes are, as Mark Twain, the line, history doesn't repeat itself, but it often rhymes. And so if many of us remember the breaking of the buck that led to the great financial crisis, right? That was basically a fund that was supposed to be fully invested, and you had, $100 was $100, but then the fund basically broke, where it wasn't worth $100 because it had illiquid assets that couldn't be resold, and that led to redemptions and all sorts of other complications. And so that's what can happen when you have some intermediary as a holding period, where what you're talking about, Philip, is if the government is the one that's actually recording, so in this case, the state or the city or the federal government recording your ownership of that title or asset or property, then it's very clear. If there's an intermediary, it could be any firm here on the table or any other firm, then there's some risk that did they do it right or wrong, right? And so that's a unique difference that exists, for example, with securities, in that DTCC is a government body, right? The bonds are done by the Fed. And so these are government bodies, so you know that they exist, but they may not necessarily be in your name. They might be in your Schwab account name, et cetera. And so those are things that I think will need to be addressed, and that'll be an important part of managing that risk.
Yeah, but it's not unreasonable to think that Schwab or any of the brokerage firms at some point would allow to hold tokenizations in your account, right? And then what happens if I die? Right? If I don't have them in a place like a Schwab account or some central location and I die, how's my estate going to know that I have them? And then how are you as the tokenizer going to know that, right? So that's the big issue too for people right now, that people are thinking about what happens when bad things happen.
Right, I'm going to go to Erica, then we're going to move on, because this is fantastic. We've been doing a lot of these online events since the pandemic hit. This is the record number. We've got 7 questions in. So keep them coming, everybody. We'll try and get to them. We've got a lot of stuff we want to get through as well. We will maybe have a whole period at the end for the questions.
I'll be quick,
You
but
gonna
just-
say, no, don't, go ahead.
Just in the idea of robust digital identity in order for this to exist, it definitely helps, like you said, but it's not necessary. Because when you look at the existing system, we don't have robust digital identity and these systems still operate in the way that they do. And I think that if obviously there's no regulatory clarity on this, very little regulatory clarity. But what I think is going to happen is they're not going to allow individuals to take self-custody. And so you're going to have this this meshing between the existing system where the government is the issuer and they hold all the records, but the technology is just more advanced. So I do not think that we need a robust digital identity system in order for this to take off, but it's probably going to happen, which is a little bit scary, but.
Right.
Yeah, it is scary. And I think that's worth noting as we talk about all the things it enables, but we've tried in a lot of jurisdictions, including the US, to not have central, federal identity registries, whether it's private or publicly run. And there are obviously like very significant privacy and public policy concerns of doing that. And certainly doing that as just a means to accomplish tokenization.
Yeah,
Cost benefit is probably not.
I'm not signing up for it.
But Dan, I have a question for you. In light of the Corporate Transparency Act, which went into effect, January 1st, right? Our government is looking for that, right? They're building a central location. FinCEN has basically said, everybody who is south of a certain number, right? Or doesn't meet the 23 exemptions, has to tell us what you own. So I think we are on that slippery slope already. Would you agree? Or, I mean,
Oh, yeah.
We are, and that's a tremendous opportunity for Jersey finance.
Yeah.
Given just how administratively burdensome that new regime is, and we're getting there. We're starting to go there.
yeah.
Great. I'm going to move on if you don't mind. And as I say, the risk of repetition, do keep questions coming and we'll try and devote some time towards the end to answer them all. What are the main challenges to tokenization? We've obviously in a way been touching on what we've been talking about, so we don't have to go over that again. Before you answer that, I sense, again, going back to the research study we did last autumn, if I can put it this way, some disappointment amongst some of the organizations who are really at the coalface, particularly in Europe, that it's taking longer than they thought it would take when they got into doing what they're doing. And some stuff is being refinanced. What are the challenges that need to be overcome before we can move up a few gears? Who wants to kick that off?
I'll just say it quickly because I know you guys are going to go deep into it. Regulation, obviously, there's no regulatory clarity. Technology, I think that there needs to be one technology that people are onboarding onto, but there's so many different options out there that it's kind of, people can tokenize, but really, to me, the main problem is that how are we incentivizing investment bankers and brokers to sell this? There's no market for it. People are not buying into this. And it's either you have a company that has a really great marketing arm or you somehow incentivize investment bankers and brokers to sell these products. But ultimately, I feel like what happens is that these people feel like they're getting cut out. And so they're not going to sell it. So that's
a good
probably
point.
the biggest
That
problem.
is very good point. And no one has made it like that before. Anyway,
So I would just say, okay.
go ahead. Yeah.
Yeah, I mean, I think there's one word to describe what the problem is. It's called education, or that word is education. There's a lack of education by the masses of what the opportunities are in tokenization. And I think that that's really what's happening here. And that until we sort of push the education and people realize the power of these tools and how they can be used effectively in all sorts of areas, it's going to continue to sort of move along at this slowest pace as a baseball game. But that's where we're lacking it. People still think tokenization means drug dealers, terrorists, Russian oligarchs, moving money around. And that's just not true. We all know that's not true, but that's the popular press puts it out like that. And we need to start educating people about that. Maybe that's what you guys are going to do with your work.
Yeah, well, we've never gone retail, perhaps, but this will be the
I don't
chance
know,
to, perhaps it's the time to go and do that.
know.
Or certainly broader than we
Yeah.
are, yeah,
Yeah.
absolutely. Anybody else want to talk about the challenges? I mean, Riz, how long have you been doing the tokenized option and what challenges have you come across?
Yeah, we've been at it for a few years. Of course, we're doing something a little slightly different in that we're digitizing physical gold. And so that's really about trying to take something that you have to now hold, have in your possession, you have to now, store it safely, keep it secure. You can't, obviously, you can't make it move very easily. So in our case, we can make it much more efficient and functional in that the gold is actually acquired right from Swiss refineries, held in secure vaults, fully insured. And so once it's there, then the asset is there. You can be the direct owner of it by title. You can have the insurance, and you have the liquidity because anybody else who's party to the overall marketplace can easily access that gold because it's in a secure, safe place, similar to DTCC, which is a singular place. So let's say a Brinks Vault is a singular place that anybody can access the asset. And so therefore, there's no issue of fake or fraud, because if you took it home, you could do something with it, try to, make it, lead appear to be gold, sort of the Midas story. But if that chain of custody is always pure and it never leaves a vault, then you know that always the asset is the exact thing. So that can be, that helps in terms of functionality. It helps in terms of costs, reduces the costs and friction significantly. And it also helps in terms of liquidity because you're getting the real asset rather than some third-party asset, which is a token, which has to have its own independent liquidity because that market itself trades $150 billion a day, so you can access that. And so that makes it very powerful for things like borrowing. If you want to use that as collateral, you can pledge that as collateral. And it's very easy because it's a standardized product and everybody knows what it is. So that's what I say in terms of making it digital mobile and that it can now move. You could, in theory, use it to move value between party A and party B, provided you've gone through the KYC AML issues. And then functional in that you can do a lot of things with it that you may not be able to do so easily when you have the real physical instrument. And that would apply, of course, to real estate, to other, real physical assets where that's really hard to do. I think with securities, we have made significant steps there, but the big growth there, I think, will come more from financial institutions using it in their back offices and operational systems to be able to move those assets much more rapidly than T+2 or T+3.
Right. Okay, great. We again, at the risk of repetition, we're getting more questions in. We're now up to 9, which is, I think, a record. We've had 9 questions in one of these sessions before, so there's definitely interest in the subject out there, that is for sure. What I think I'm going to do is pause and have a look at some of these questions that have been coming in. And before we get on to the next question I'd like to get into, which is, which of the asset classes have the most to be gained from tokenization? And I'll see whether we have a question that links in with that. Hang on a second. There is a question, from someone who's read our research. Research I read from IFI Global shows that carbon credit, we talked about carbon credits. Sorry, we talked about carbon credit, I apologize. Research I read from IFI Global shows that carbon credits is one of the asset classes making the most progress in tokenization. Can you explain how that market works? We might have to invite a member of the audience to answer that question for us. But more, before we get into carbon credits, the question I'd like to ask the panel is, which asset classes have the most to be gained from tokenization? Who would like to pick that up first?
Yeah, I'll jump in quickly. I mean, I think again, coming back to this accuracy of ownership, you look at asset classes that right now have kind of the most difficult to manage ownership tracking, and that would be things like some commodities, private companies, securities. I think Erica kind of touched on this earlier. And I think in a lot of these cases, the reason why the benefits are there is because, in a lot of instances, the disparate and inconsistent ways that ownership is tracked actually leads to illiquidity in those markets. And the idea is, if you know who owns what, you can actually then have a path to liquidity. I mean, putting regulatory issues aside and assuming they can be solved, that's a big piece. So I look at things like private company securities, commodities, things like carbon credits, which are sort of ethereal and I think hard for people to grasp and understand what's really being bought and sold. And those are the things that jump out at me, and frequently the areas probably where I kind of have the most frequent conversations with people looking to tokenize assets.
Okay.
Real
would
estate,
you-
unlisted equity, and then I would say investment funds probably have had the most success so
Yeah.
far.
Yeah.
Yeah.
And we touched upon, I think, again, it was before we started, another area of interest we have as a company is in what's going on in sustainability, and definitely this tokenization taking place in some of the sustainable asset classes at the moment. Anyone want on this side of the table to answer about the areas of most?
Yeah, I mean, one area is royalty streams, right? People who are buying music rights or publishing rights, there's an opportunity there to do it there. I think it's good. I think the hard assets are self-explanable. But, you know, self-explanable, but you, obviously commodities for you guys, right?
Yeah, I think they've been covered. I think
Yeah.
commodities are clearly an important one because they're moving all across the world and it's not necessarily clear who's the owner. They're not the same as securities. I think it goes without saying, real estate is probably one of the most inefficient because it takes so long to figure out who's really the owner. Think about if you're selling a property or buying a property, you have to do a title search, and you know it's a very long and laborious and expensive process. And if it was recorded in a consistent manner across the various jurisdictions, then you could very quickly determine who is actually the owner of the asset. And so that's, and of course, it's by far the biggest market. It dwarfs all other markets. It's not even close. So this is a $300 trillion market
Yeah.
compared to everything else.
Real estate is,
Yeah.
right.
So you're exactly, I mean, it's sort of touching on the previous question, which are the challenges to be overcome. I think if you wanted us to select one single asset class, real estate is probably the biggest asset class that can benefit from this. But every jurisdiction, we come back to this point, this is as much as it is anything, you know, we've touched on the technical challenges or commercial challenges, but this is a legal and regulatory challenge, which is wildly inconsistent ways of recording things and process. And the process in the real estate side can also involve significant number of, let's call them physical processes that we can't disintermediate quickly because there's someone that needs to go and do something or do this. And that is inconsistent across jurisdictions. So now that is one of the major hurdles, is trying to find ways to bridge those problems or bridge those gaps.
Yeah, one of the things that surprised me coming back to our research, which I didn't know anything about at all till last autumn, a lot of people said money market funds are really, particularly into the retail long only space, it's tokenization of money market funds is actually leading the charge on that side of the business. I don't know whether this is all mainly an alternative private fund asset side. Does anyone know anything about that? Because I didn't know anything about money market funds. I don't know anything about money market funds anyway.
Yeah,
But in terms of tokenization.
I've seen that a little bit, and I think it also just picks up on this theme, which is there are a lot of unsexy areas of finance where this also makes, I mean, real estate's very easy. There are a lot of tokenization projects in real estate. It's easy to conceptualize how this works in real estate, but money market funds are a great example. And the other one where I've heard this come up a lot is in areas like trade finance, in terms of letters of credit and bills of sale and all of these instruments in the trade finance space that, to Philip's point, there are a lot of international conventions on these things, but they're all handled slightly different in different jurisdictions. And the idea of having the global technical standard that you can achieve through tokenization and get real-time visibility into where these various instruments are and who holds them. I mean, that's like hugely complicated. There's so much trading of these instruments happening, and it's being done on paper and in email inboxes. It's very difficult to track that kind of stuff. And so the money market funds are an example of, again, kind of like not the most exciting topic, I think for a lot of people, but same thing with trade finance. And again, what it really comes down to is you have to look at kind of the status quo processes. And I think if you talk to the administrators of various types of products and asset classes, and if you measure their unhappiness with their jobs, it's probably inversely correlated to how right they are for tokenization. Like in trade finance, talk to people.
That is definitely a quote we're going to use.
Yeah,
I
and
think.
truly, you
brilliant.
talk to people in trade finance at the big banks, and they are some of the most happy people outside of work. But then when you talk to them about, we don't know what's going on with this letter of credit, it's an area that's ripe, and we know all the big banks are looking at how to do that either internally or via some kind of industry standard.
Right. We didn't really get into the answering that guy's question on carbon credits. I don't know whether this is the right time to do that. Anyone want to say anything about the carbon credit market? Anyone know?
I just want to touch on your money market. I mean, that's what the ARCA US Treasury Fund is.
Oh, sorry. Right. Okay, good.
So,
Well, I didn't know that.
so, you know, it's the first product that's been, it's an interval fund, so it's not 100% like a money market, but it's a tool to be used like a money market.
So can you explain how that works to the uninitiated like me?
So basically, you have to be an accredited investor. You fill out the forms. You have to. It's still very paper intensive, right? But you fill it out, and then you can buy the R coin, which is a token for money market. I mean, that's
And what
it
would be the reason why you would do that rather than going through a traditional mechanism of getting that fund?
I think just for most of what we've been talking about today, which is that it makes things easier for investors to move money around. It can be used as collateral for certain things that aren't as easy to use. And there's a good return.
Okay, good. And probably the same would apply in that sense to carbon credits, because it's not it's a very, at least to me anyway, it's not something I know really anything about, but it will be a way to get in there if you're interested.
Right. It's an easy access point. Right.
Right. Okay. Well, let's move on. This has been talked about to a certain extent already, which is the relatively slow uptake. Let's not deal so much with that, but with the second part of the question is, when do you anticipate, assuming you do anticipate, when do you anticipate that this will change? And we need some dates, please.
I'll say, okay, so to give a date, two things that I think there are really interesting that could increase this uptake is in Q4 of 2023, the DTCC purchased Securrency, which Securrency is a startup in the blockchain space that they've just been doing tokenization. I mean, I first met them, I think, in 2017. They bought them for pretty inexpensive. I think they bought them for like $15 million. But what you're seeing is now that they have this technology that is millions of lines of code that is interoperable with all of these different blockchains, they've thought about a lot of currency before they were purchased by the DTCC. And I think you see a lot of enthusiasm there. And now that this clearinghouse is essentially, I mean, they are the record keeper. And now that they have technology in their hand, I think that we're going to see a lot more take off.
Okay.
And then I would say the secondary thing that is making this possible is when you see countries like Jersey come up and they're like trying to create regulatory clarity on it. I know we didn't talk about it too much, but I think obviously the issue is there is no standard. If you want to take a company public, if you want to raise money for your fund, there are rules and you know who you're allowed to go to and who you're not allowed to go to. You know exactly where you're supposed to file, and none of that exists. And so I think that Jersey creating some type of framework for that really will clear up a lot.
Okay. Anyone else want to stick their neck above the parapet and give us some dates as to when things are going to happen?
When we get a new SEC commissioner, so hopefully that happens early next year. But I think the answer is if DTCC can get out there and show the world that this can be done, it could be quicker than we think.
Okay, because that brings us neatly. I know we've now gone to double digits on questions, so I haven't forgotten about this. We'll have to come back to that. What I'd like to, because that neatly brings us on to the big question we're going to get onto, which is generally a very boring subject, but I think in this case is not regulation. And I'll introduce this by saying that, again, coming back to our research, the risk of repeating that subject again, is that what people wanted was some sense of clarity about where this is going before they commit lots of money to doing certain things, because certainly in Europe, which is regulatory craziness with the EU and all the other stuff we have and the different jurisdictions and so on, you have a big market with one regulator, thank God. But people are afraid, it seems, to do too much till they know what the hell's going to happen on the regulatory front. But maybe to Dan's point, there will be clarity here from the US and people will follow the US lead. What's your view on regulation? People weirdly wanted more of it for the first time, probably we've ever done research. We've been doing it for decades rather than years. They want some regulations. They want some signposts about what's going on. Anyone want to pick that up?
Well, I guess the question is, do they want more regulation or do they want clarity?
I think that's exactly
Clarity.
I think
probably,
they want
yeah.
clarity.
Yeah.
So, is there something historical, like an analogy we could pull from that says we've been in this place before And there's this sort of transition that's occurring and everyone is trying to figure it out. I'm not sure, so that's perhaps a question, but anecdotally, over the last several years, I've spoken to a lot of managers in this, looking to do things in this space. They're reticent to do it because the costs associated with getting it wrong can be significant. And those costs are real world costs, tax consequences if you do it wrong. There's perhaps regulatory oversight that you weren't aware of, that you violated, so now you have legal consequences. The clarity is important. It's not so much the regulation. Now, obviously, it stems from regulation, but I think people are looking for clarity.
Right.
So Simon, I'll maybe I'll throw something into the mix. So I'm somewhat pessimistic on this. In the context as follows is that I think everybody's looking for the larger countries to lead, and that's really not the way it's going to work. I don't think, and we have lots of history around that. So a good example would be telephony or real-time payments. So telephony, the mobile phone basically has democratized access. But where did it really democratize access? It did it in more third world countries who never had landlines. In the United States, we had landlines, we converted to mobile phones. I mean, still you can find plenty of places in the United States where a mobile phone doesn't work very well, but in places like India and most parts of Africa, mobile phone is the only choice. There is no such thing as landline. Real-time payments, of course, we are, the biggest economy in the world by a long shot. We don't have real-time payments, but they've had it in China and India and many other countries where they do real-time payments, have been doing it for years. So I think the most likely lead is going to be countries that are willing or jurisdictions that are willing to be cutting edge, that can identify a niche area where they can really make a big difference. It's not going to be led by the largest places because there's too much regulatory burden that must be addressed. And this is the reason fintechs exist as opposed to banks, because banks are going to be always slow to completely overhaul their entire systems and infrastructure. It's expensive to do it. If you can start with a white sheet of paper and build it in a better way using technology, that's what fintechs are trying to do. So it's going to probably be from smaller jurisdictions that are much more nimble, that can identify a niche where it can really have a big impact in a particular area.
I'm gonna have to jump in, sorry. So that is precisely why in 2018, Jersey put together a range of codes, foundational codes in this space. And it's an evolution. So what was happening in 2018, very different than what is happening today. So Jersey's going through this process now of evolving those into, rather than sort of siloed codes, but more streamlined and linked together in seamless codes. But to do that, you need a jurisdiction that has a really solid working relationship between the government, the regulator, and industry. Industry understands what it needs to do, the regulator's responsibility to the constituents it represents as its government. So finding jurisdictions that are actually actively engaging in the process, meaning they're getting their hands into it, I think is the critical piece. Now, from Jersey's perspective, we think we're doing that robustly, but that is a key piece.
Okay, do you want to say something, Dan?
So I think there's a lot. I think I agree with everyone else that the desire really is not necessarily for more clunky regulation, but for clarity. And I think that comes from the fact that there's so much ambiguity now. And also, if you were to apply a lot of the existing regulations and laws to the space, they just don't fit. And people have made this point for a while. The SEC tells token issuers, all you need to do is come in and register, but then you can walk the SEC staff through, like, here's why we can't meet the registration requirements. It's not really a viable alternative. That's the point Coinbase has been making in its litigation with the SEC right now. Part of the issue with the regulators is, I mean, we in our office, we have like CNBC on the TV, all that, and it's just amazing the amount of coverage they devote to digital assets, to cryptocurrency, token projects, when they are such a small market compared to the bond market, for example. But it's not exciting to talk about that.
They don't want us to look at it right now.
They don't want us to look at it. But the issue is, that's what retail investors are kind of seeing all the time, and it's what the regulators are seeing all the time. So there's a big focus on it. You know, I kind of understand Jamie Dimon's frustration when he was asked about this at the World Economic Forum. Like, I don't want to talk about Bitcoin anymore. It's such a small thing in their business relative to it. But the issue is that the regulators see themselves, there's really three areas that are problematic, I think, for tokenization to take off. One is the thing that attracts all the attention, which is, our token securities, are they part of an investment contract, et cetera. That's a hairy area, and we spent a lot of time talking about that in my practice. But the areas that are like less visible are, okay, put that aside. The SEC also regulates investment managers, and the SEC's securities regulatory equivalents in other jurisdictions regulate investment managers. And even if you solve the security issue, say, fine, we'll treat it as a security, or we understand Bitcoin is not a security, it's how do investment managers actually hold and trade these assets and market these assets? That investment management regulatory piece is an area where the SEC has been very slow to provide guidance, and other jurisdictions can solve that. So the security, is it a security, is it not? If you're touching any investors in the US, sort of a persistent issue. But how does an investment manager actually operate in this asset class? That's something that is an opportunity for other jurisdictions to do. And the last piece I'll just mention is, it's not just the SEC that's an impediment here. It's the Federal Reserve and the OCC, because to the extent you need financial institutions involved in this ecosystem, you have those regulators whispering different things at different times about how appropriate it is for banks to be involved. They don't put out rules. They just talk about whether it's prudent or sound, and they give speeches about it. It's not super clear. You've also got the Treasury Department and the IRS, and the patchwork of regulators that apply to this space makes it really challenging to navigate. And there's some areas where you're completely outside the US, you can navigate things a lot easier. But if you have customers, you have investors, holders, owners in the US, some of it you can do outside, but some of it's going to continue to be a problem here until there's more clarity.
Okay, great. Now I'm going to go, this is the perfect time before we, in the last whatever minutes we've got, I'm going to go to questions we haven't got anywhere near answering. I'll try and take those in terms of the areas we haven't yet covered. The first one is the data on how quickly different asset classes are tokenizing? No? Anyone? No? I can answer that one myself if you want. Because we're going to try, I'm not saying we're going to succeed, but we've been having a lot of conversations with various entities to try and get that data. So if we're very lucky by the spring, perhaps not until the summer, whenever, but certainly this year, we're talking to, at least in the UK and in a big firm called Tokeny in Luxembourg, to get that data where we can say, at least in the areas we're interested in, which is the real assets, this is what's happening. These are the managers tokenizing funds. So it hasn't happened yet. I'm putting that out as an objective, but I don't think anyone's doing that yet. So that's answer that. There is a question we've half touched upon about sustainability. What are the opportunities in sustainability? And someone said, I believe forestry funds some forestry funds are tokenizing. Anyone want to answer that? Anyone know about sustainability and tokenization? Sorry that we haven't got an answer there for you on that, but I do think that person who asked the question is right. There is stuff going on. I think that's a very exciting area for tokenization. Here's a good question, really simple question. How secure is the blockchain?
Depends which one.
Well, there's public spaces, there's private, and then there's private spaces on public. Maybe you can answer all three of those.
Sure. I mean, it depends what you mean by secure.
Right.
Because the blockchain itself.
That's a good political answer, isn't it?
Yeah, it's a very good, it depends. It's the ultimate
Yeah.
answer, but it depends what you mean by security, you know, in terms of if you initiate a payment, is it going to go from A to B to the wallet you intended to? The answer is yes. But if you're talking about ultimately control over wallets, control over assets, it's really going to depend on the technical stack and the blockchain that you're dealing with. So, and also, frankly, how robust the blockchain is. And so smaller chains that have fewer people on the network are going to be more susceptible to attacks, like take over 51%, what they call 51% attacks, where people can effectively rewrite the blockchain and rewrite the ownership ledger, that's difficult to do with Bitcoin or Ethereum or Solana or any of the big ones right now.
Yeah, and there is no the blockchain. I mean, there's multiple blockchains. I could spit up one right now, probably if I wanted to, if I text a couple friends. So there is no one blockchain. And I think this is also one of the reasons why tokenization has not taken off, is because it's almost like people have to decide on which blockchain they want to tokenize on before this takes off. You could still use different ones, but then you would have to have like interoperability. But there is no the blockchain.
Well, there's a lot of smart, I don't know what the figures are now, but I haven't seen anything recently, but that people have been able to hack into smart contracts.
Okay.
And I think, going back to a previous point we were discussing, people are afraid. They don't know enough about it.
Mhm.
And they all think the criminals probably know more than they do, and they may be right. Is that a danger for you in terms of, is there always that sense that something could go wrong because some technological whiz kid is going to know something more about what's going on than you do and stop you doing things, whether it be even on a private blockchain? There is danger of fraud. Is that, am I right in saying that?
Yeah, absolutely. Yeah, so obviously we don't use, we're not operating our own blockchain. We just use, we use something, you know, that's, you know, industry standard, Microsoft version for keeping information, but we have relational databases as well. And of course, we have a physical asset that's sitting in a unique place. So you can't steal it. You got to steal it from the vault as well. So there's a combination of things. Obviously, you know, to the point that you touched on, people are going to be much more nervous about something that's only working sort of in a world that you can't see it, touch it, feel it, because somebody can hack it and take it from you, and you don't even realize it's been done.
Exactly.
With real world assets, obviously you can't hack it and steal it because there's also a real world asset, and provided that that's in a unique and safe place as well, then you've got a couple of different layers of protection as well, which is very important.
Yeah. Do you worry at all in terms of what you're doing in this area about the potential for fraud upending what's going on?
I think you have to worry about fraud in every area they operate in today. I mean, I don't think it's unique to this area at all. I think it, excuse me, I think it's something that we all are thinking about all the time.
Right. Okay, what else do we have here? We have right. Right, here's another question from somebody who's given their name, called Tim Cornick. Is tokenizing an asset, for example, a building, fundamentally any different from putting the building in fund structure and issuing shares in the fund?
Fundamentally, I would say.
I mean, economically, it's the same. The question is how do you actually report the ownership?
Yeah.
So if you were to do that, and you own a piece of the fund, what do you get to evidence your ownership? You know, you might get a piece of paper, you might get an email, you might get a link to a website where you can log in and see it. But if you tokenize it, you can open a wallet on your phone at any time, see that you have that asset, verify your ownership, verify it's still there, as opposed to the piece of paper, it's not updated in real time. You don't kind of know what you own.
Right,
But also, to your point earlier, Dan, it actually links the payment flows.
Right.
Directly, so that is a unique difference between the two, and you're actually owning the asset as opposed to owning an asset that owns an asset. And this actually, I'll put to you as a question, Dan. There, you know, we've talked about, so payments like a benefit, if you will. But what about the obligations? So take a property, so as this example, what's the difference? You own a building, but there are obligations that come with owning that, the responsibilities. So how does that work as on a tokenized perspective? So now you own the asset directly, but now you have obligations that come with owning that asset.
Yeah, it's a good point. I mean, you could also, I mean, we've seen instances where people have set things up where you're required to keep kind of a certain amount of liquidity in a wallet, and you could draw on that liquidity for like capital calls and things like that. It goes both ways. So you basically have easier to execute transaction flows in these ownership structures. You're right, it could go both ways. But I think Dan Strachan made a point that I thought was also good, which is the more evident it, the easier it is to evidence ownership. You can also collateralize those assets and things that might be a little bit harder to do at the top paper.
Okay, I'm gonna take,
Just,
sorry,
just
go on.
one more point about the fund structure. The fund, if we own the fund, if we own the asset in a fund, the only way we can liquidate that asset is if we go onto the secondary market or redeem, right? And if we own if we own the token on our fund, in theory, we could sell it to somebody else
Right.
in a very, and quickly, right? We could bring liquidity to our own portfolio faster than we would be in a fund structure.
Okay, I'm going to take one more question for the audience, and I've got my killer wrap-up final question for you all, and then we will call it a day. So this is quite an interesting last question from the audience, I think. Surely the opportunity of digitalization isn't just to do exactly what we do now, but to do it smarter. Isn't the opportunity of digitalization to do something very different, much simpler, much cheaper, and easier to regulate? Tokenization is fine, but it isn't just a isn't it just a smarter and slightly better way of doing what we are doing now? It's kind of a big, nice, broad question for you all to go out
So the
and
answer is, so what? The answer is, so what? If that's true, what he or she is asking.
it's a he
It's
called
a,
Ian.
Mr. Hunt, so what? Use the example of, we had the S&P 500. Prior to the first S&P 500 index fund, you had to buy 500 different stocks and you had to figure out the weighting. Now you buy the S&P 500 fund through one point of entry. Then we had the S&P 500, the SPY. We can buy that. We bring in democratization to assets. That's what the benefit of this whole thing is. And if we make it cheaper, better, faster, that's even 3 different benefits we have.
Anybody else want to answer that?
Yeah, I think that's actually a great way to think about it.
Oh, look at that. Props.
All right. No, we haven't had any disagreement here. This is my complaint. Anyone want to disagree with what Dan has said or not? No?
It is pretty much the same thing we already do, but a lot more efficient.
Yeah.
Which is
Okay.
good. I mean, you need efficiency.
Okay, here's my killer last question. To wrap up, I'd like you all to give a quick fire answer to this. If we were sitting here in 3 years' time, and God willing, hopefully we will be, what would be different about digitalization or in tokenization of especially real assets or assets in general from where we are today? So let's just go down the panel from that. Philip, do you want to kick that off?
Well, I think you're going to start to, again, you're asking us to sort of like, how long is a piece of string? So 3 years from now, I would expect to see greater harmonization cross-border because the economic necessity of it, it's going to drive greater. The transactions get bigger, and you build a stepping stone. One transaction leads to a bigger transaction, leads to a bigger transaction. Problems arise. People have to solve these issues. So I would expect over time, over these 3 years, greater harmonization. And like anything, it has a it has a compounding effect. So it gets faster, and those problems get solved in a faster way. So that's what I would expect. I would expect to see greater harmonization across the board.
Okay. Riz.
I'll say that I think we'll see a lot more activity where smaller, nimbler organizations will work with larger organizations in a B2B type of environment to make things easier for them to do, which might be cumbersome for them because they're large, bureaucratic, et cetera. And so therefore will bring some of the benefits of what smaller organizations are able to do in this space to larger ones who will be able to bring it to scale.
Right. Dan.
3 years from now, everyone will have a wallet on their phone or whatever device we're using at that point, where we all own tokens and various assets, whether it's commodities, whether it's real estate, whether it's airplanes. That's what's going to happen. No different than we all.
3 years, that's pretty ambitious.
Well, I'm an ambitious guy, Simon.
Yeah.
But I mean,
you wear the glasses to be ambitious.
it's not just about the glasses, but partially it's. The issue is that, look, 3 years ago, most people didn't have Coinbase app on their phone. Now most people do, or some function thereof, right? Robinhood or something like that.
Right.
That's what's going to happen. We'll see that.
Wow. Wow. So it's really going to explode in the retail sector is what you're
I
saying.
believe so, yes.
Okay.
I think you're going to see a lot more uniformity in the avenues that you can tokenize. And I really think that the financial sector is going to adopt this technology because it's just so much more efficient.
Yeah. And what we haven't talked about today, and we're not going to get into it now, but I'll leave it hanging for the future, is coincidentally or not, the fund industry really needs to update its infrastructure, its technological infrastructure, sorry,
It's been
it's
a
been
while.
really behind. If you
Yeah.
talk to Daniel Guher, who was on our panel in New York a year ago with you were there, is there for, he talks about this a lot. The industry's technology is way behind other industries. And now we've got AI coming along too. So it's going to change everything very dramatically.
Yeah,
Look-
I think you see T plus T0
Mhm.
really become a thing in 3 years.
Right.
Yeah.
Instant settlement.
Dan, the final word of the day with you.
Yeah, I think a lot of the innovation, I mean, this is thematically consistent with what other people are saying. I think a lot of the innovation in this space is not going to be that visible. And I think you'll know that this has worked and been successful if you're doing research studies and you say, well, people own these things. They don't even realize they've been tokenized. So it's not, you have to have MetaMask on your wallet or whatever, you know, these like self-custody solutions. But it's integrated into kind of a mainstream wallet product, your financial institutions or things like that. I think we will see progress on that in the next 3 years. I think, and I'm very excited by all of the people that are really working right now on building that infrastructure, which is, again, not as exciting as people doing, you know, NFTs or stuff like that, like a lot of the like prior bubble cycles, but there's a lot of work on infrastructure and ownership infrastructure now, and I think in the next 3 years we'll see some real progress behind the scenes.
Well, thank you, those of you who are in the room with us in Miami. Thank you very much, panel, for a really good, lively, typically interactive. Oh, my only complaint is no one really disagreed with anybody, which was my only complaint. But other than that, it was fantastic. Thank you very much for all your contributions. Thank you, those of you who are out there around the world. I'm always amazed at how many different countries and how many different people we get for these things and for all your questions. Thank you, everybody, and hopefully see you the next time. We will have a recording of this that will go up on our website in approximately a week to 10 days. So if you want to come back and listen to it, you certainly can do that. And we will put an article again on what's been discussed this morning into one of our publications. And so you can see a summary of the discussion there too. Thank you, everybody. Have a great morning, afternoon, or evening, no matter where you are in the world, and see you the next time. Bye-bye.